Hi everyone, thank you for joining us today for our webinar, Inventory Adjustment Options in Dynamics 365 Finance and Operations. My name is Katie and I'll be the facilitator today. If you have any questions during this presentation, please type them into the question area in the control panel on the right-hand side of your screen and we'll answer questions at the end. This session will be recorded and posted on our blog as well as shared with you early next week. Now, I would like to introduce our presenter today, Jared Williams, D365 Supply Chain Management Solutions Specialist here at Encore. Jared, I'll pass it over to you.
Awesome. Thank you so much. Hello, everybody, and welcome. Thank you for joining today. Today, we'll be talking about inventory adjustment options within Dynamics 365 Finance and Operations. There are quite a few different ways to adjust and move your inventory around, and those different ways can be kind of confusing if you don't know what you're looking at. So my goal today is to show you the four most common types of inventory adjustment journals and how to use them. So just to give you a quick agenda for today, we'll give you an overview of the four different types of journals and how they can be used. Then I'll provide a demo of each of those journals with a bit more information and details around how each of them function. And then there will be time at the end for questions. All right, the four different journals we're discussing today are the counting journal, adjustment journal, movement journal, and sales journal. These all have a very similar function in that they change the quantity and value of the inventory that you have on hand. So we're talking about changing how much inventory is on hand in a warehouse or store location. They all function slightly differently. So at a high level, the counting journal functions for users who go out to a shop or warehouse or store floor and count an item. And this journal is used to true up your inventory. So a user is going to input what they counted on the shelf. Dynamics is going to compare that to what it expects and then make an adjustment for the variance. An adjustment journal is for directly changing the inventory on hand up or down. So rather than going out and counting and have the system true something up, the adjustment journal is meant to add a certain number of units or subtract a specific number of units. The movement journal functions very similarly to the adjustment journal, with the difference being that it allows a user to specify a different account that the journal will post against. So you can monitor the financial impact of these journals with a little bit more detail using the movement journal. And then the bill of materials journal is a great option when you need to convert one item or a set of items into a different item or set of items. And this could be outside of a regular production process. And I'll give an example of what that looks like today. All right, so jumping directly into the demos, we will start with the counting journal. So I'm going to share my screen here. All right, and we are now in my Dynamics environment. And we have two items that we're going to be looking at today that we'll be demoing with. You can see we have these item numbers here, some descriptions about them. I'm working in my warehouse number 11, and you can see that I have physical inventory already on hand of these items. Each of these journals, the end result of each of these journal processes will be that this physical inventory number right here will change based on what we do. The first journal we're going to look at is a counting journal. All of these journals are found under the inventory management module, under journal entries, and the counting journal is under item counting and the counting journal type. We'll create a new journal and set my default site and warehouse to the site and warehouse that I'm counting in today. From here, we can begin to populate the details of our journal lines. So when we add a new journal line, we're prompted first that we must enter an item number. I'm going to grab this first item number right here and paste it in. That will populate the rest of the information and details about that specific item. And of course, you can see here we have our different inventory dimensions. So I'm existing in a site and warehouse level. This inventory is not stored at the location or any deeper set of inventory dimensions. But of course, this would work for whatever configuration of inventory dimensions you're using within your operation. From here, we're shown in the journal what the current on hand is. So 100 is what is expected here. And we are able to enter a quantity that we count. So let's say I'm a user and I go out to the floor and I'm told to go count this item. I walk out to the floor and I count 110. When I enter 110, you can see the quantity automatically populates with the quantity variance that will be posted when we post this journal. Additionally, we have the ability to specify a worker who performed a count. And then the extra bonus of using a counting journal is you can also specify a counting reason code. And so you could set up multiple counting reason codes for why is this item being counted? Maybe it's a regular cycle count. Maybe it's damaged inventory. Maybe there's an inventory variance that you just need to adjust that's not one of those two things. These you can specify accounting reasons. Counting reasons can also be tied to specific ledger journals, and so you can specify how financially to record different counts based on the reason code here. You don't have to have a reason code if you don't want to. It will just default to the regular inventory adjustment account if you do not specify. The worker and counting reason codes can also be used in conjunction with the Dynamics WMS process, and it can populate the worker who completed this task if they were to complete it using a WMS mobile device. And the WMS mobile device can also be configured with the counting reason codes so that counting users on the floor, inventory users on the floor, can specify why they are performing this count. Let's add another item just to show the negative adjustment as well, and we'll add this second item from my list. And even though there's 70 on hand, I'm going to walk out to the floor and I count 65. And you can see this populates with a negative value of -5. Upon posting of the journal, this journal's been posted now, and if I come into the on-hand list and refresh my on-hand list, you can see my available inventory has now changed to be in line with what I have counted. If I dig deeper into the item, you can also see that I have a counting journal that has been created for 10 eaches. This is a previous counting journal that's been done for the same quantity. And digging into these specific journal numbers, you would be able to understand the financial impact and how each of these things impacted what happened during that transaction. And that's the inventory counting journal. All right. The next journal we're going to look at is the adjustment journal. The inventory adjustment journal is an excellent source when you need to quickly add one or multiple items or remove one or multiple items from inventory. And you're going to post it against just the default financial ledger for your inventory adjustments. You don't need to specify anything specific. This is simply for inventory adjustments. Typically, we find a lot of the use for this is when you're adding items for the first time. If you have on-hand inventory and you're adding a new item to Dynamics, you can use an adjustment journal to create your starting balance of inventory. Otherwise, you might want to consider using other ways to get inventory in, like purchasing inventory or building inventory through production orders. But of course, the inventory adjustment journal can be used to add or subtract inventory per your business needs. This is the most straightforward journal, in my opinion. So we add the item, we can take our item number, which I'm going to go back to that first item that we have. It's going to populate my item details, and then we get to enter a quantity. We can also specify our unit of measure here. So if we have specific unit of measure conversions set up for this item, cases or dozens or whatever other process you're using, you could use that as well. For now, let's just say that I'm going to add 5 units of this item. And then of my second item, let's look at a negative adjustment. And I bring in the item here, and by default, it brings in a value here for me that's available to move around. But I'm going to say I actually need to remove the 5. So I've specified a quantity of 5. There's a minimum quantity allowed on this item because of how this item is configured. And so we're going to accept that minimum quantity here for this adjustment. And it automatically populated for that. That, of course, is all specified based on how your item is configured and the minimum quantities for your items. Additionally, when you're in the inventory adjustment journal, you can also view the cost that's associated with this. Again, we were not able to see that in the counting journal because that journal is specifically meant more for inventory users who are not concerned with or have access to costing information. And the goal with a counting journal is to perform the count with the highest integrity, to not allow a user to create different numbers than what was physically counted or be concerned about the size of an adjustment because of the cost. The user should count what's physically there and report what's physically there in the counting journal. In the adjustment journal, you have the opportunity to understand this before you post it. And so when I add this in, I can now post these items. We will let this journal post. This journal has posted. And when I come back to my items, we can see my changes have been put into place here. All right, that's the adjustment journal. Again, it's the most straightforward. Unlike with the counting journal, we are specifying the quantity that we are changing, whereas with the counting journal, we were specifying the quantity that is physically in front of us, the quantity that we counted. And unlike with the counting journal, there's no reason code for this journal. Inventory adjustments are inventory adjustments. That is the reason for them being done. There's not a reason why a count was performed or a reason why an adjustment would happen. That could be included as an attachment in a note on the attachment of the journal, but inventory adjustment journals are simply inventory adjustment journals. All right. Next journal is the inventory movement journal. The inventory movement journal behaves very similarly to the inventory adjustment journal in that you specify the quantity that you are changing your inventory by, whether that's positive or negative. You will move the inventory up or down. The extra benefit that comes with the inventory movement journal is you can specify what offset account to use. And you can pre-select offset accounts based on different users that are using the inventory journals. You can also specify different reasons why a different offset account would be used based on initial configurations. So if we create a new movement journal, we are going to set here the warehouse here. And you can see by default, I have my offset account set here. And we would be able to create additional offset accounts if there are reasons why we might want to create other movements. For example, perhaps you are stocking a break room with inventory that you also use for sales. So maybe you're producing a food item that you sell to customers, but one of the perks of working at your company is that you get to enjoy that food item in the break room. Rather than creating an internal purchase order or internal sales order where users would have to process all of those records through to get these items consumed for the break room, an inventory movement journal is a great way to stock up those items, specify the offset account as the break room ledger, and then adjust this inventory toward that offset account. That's a great way to keep track of why is this inventory moving in and out of your warehouse. Now, the other thing that's kind of unique about the inventory movement journal is its name, right? So it's called the movement journal, which a lot of people will immediately think that that means moving the inventory from one place to another place. And that's not what this journal is for. This journal is for moving the quantity of your inventory up or down. If you need to move inventory from one location to another location or from one physical set of dimensions to another set of product dimensions, you would want to use an inventory transfer journal, which is not covered in this webinar, because that journal does not impact the amount of inventory that you have in your business. It simply moves it from one place to another. This journal, the movement journal, impacts how much inventory you have. We'll specify our offset account and we'll begin processing the journal. We can also add our journal lines here. So as we've done with the other two journal types, we can specify the item number. It will populate through here. We can specify positive or negative quantities. Let's say for this item, I want to specify that we're going to move this. We're going to get rid of 10 units. We found that. And then we're going to add the other item as well. And we are going to add 20 units back in on this one, and that populates all the way through. In addition to setting the offset account at the header level when we created the journal, if there are multiple lines within a specific journal that you would like to set to different offset accounts for different reasons, those can all be done within one journal. You don't have to create a unique journal per. That offset account that we set at the beginning is what will default in here on this journal the first time. All right, and then we can post this journal. And now this journal has been posted, and if we look at our on hand, we can see that our on hand has once again changed on this inventory. Let's take a look back at these transactions on this inventory so that we can see how the inventory adjustment removed 20 eaches. The counting journal removed 5 eaches. We also have another inventory adjustment from earlier. This is our initial one. You can see that added it in. We've moved some items around. The transactions, you can see what's happened with this item. And our inventory adjustment and counting is recorded here that we've done so far today. And then we have one more journal type, but before I move on to that final journal type, which behaves ever so slightly differently, I just want to summarize these three types that we've gone through so far. We have the counting journal, the adjustment journal, and the movement journal. The counting journal allows users to specify how much inventory they physically counted. Dynamics will check the delta and perform the adjustment for the difference. The adjustment journal is for specifying, adding, or removing inventory. It's very basic and straightforward. The BOM journal allows you to add or remove inventory, but specify what offset account that is being pressed against. All of these journals, in addition, can be set up to have approval workflows. So if you have concerns about users creating adjustments that are outside of regular business process, that are maybe creating large financial variances, you could set up limits to require supervisor or manager approvals on all of these journals prior to posting. Users could get in, they could set up their journals how they want to do. And for example, in the movement journal, you can even specify which offset accounts different users are able to specify in their movement journals. It's all very configurable to your specific business operations needs. Our final journal type is the bills of material journal type. This journal type is different from the other journal types because it is meant to consume a piece or pieces of inventory in order to create another piece of inventory. Very similar to how a production order or a manufacturing process would happen within an operation. The bill of materials journal can do that inventory transaction without having to go through the setup of production and the whole process for production. Bills of material journal, as with the other inventory journals, are for changing inventory on hand quickly and with one journal. So we'll create a new journal here. I'm going to set my site and my warehouse. And I'm going to begin adding my lines. The first item I'm going to add here is this D0005 item, which will be able to be used in a quantity of 1. You can see it is not selected as the BOM line. So this is a unique feature that's included only in this BOM journal. is when we're specifying whether an item is part of a BOM line or essentially kind of thinking of it as the BOM header. So by not specifying this item as the BOM line, that tells me I'm going to add this item into my inventory. When I add another line, you can see that the second line here, the BOM line, is automatically checked, meaning that we are going to consume this item from inventory. And this item requires a size to be consumed. And you can see, so in this journal, when I post this, the expectation is that we will remove one quantity of M0010 and we will add one quantity of D0005. This is a great example. As I've stated, if you are in an operation where you need to quickly change one thing to something else, because maybe you had a promo item that the promo has run its course. You're no longer selling that promo item, and you want to sell that promo item as the regular item. Maybe it's it's something that comes with a free sample attached to it, and you're just going to merge that item that comes with a free sample into the regular item that does not come with a free sample. But you don't want to have to go through your whole manufacturing process in order to do that. A BOM journal is a great way to do that, because within this journal, when we create this item D005, we're creating it with the cost association of this item that's $49.98 being consumed in order to create this D005. So when we look at our average cost in the system, when we look at how things are actually costed out, we have a record of what this item D005 actually cost us at this instance when we created this BOM journal. I will post this BOM journal now. And that's been posted. And when I come and look at my on-hand inventory, you can see now my quantities have changed. So we have subtracted one and built the other. So this has been a recap of the 4 different journal types. Again, to go over in detail, or to give a high level recap, we have the counting journal, allows users to true up inventory, also allows users to specify a counting reason code, which can be used for reporting and also can be used to specify which offset account is used. We also have the adjustment journal type, which is the most straightforward type, mainly used for adding and removing inventory at the adjustment level. It's going to hit one specified offset account that's set up as a default. We have the movement journal, which is meant to add or subtract inventory similar to the way the adjustment journal works. However, users are able to specify the offset account. So that's great for financial reporting, as I said, in instances like you're stocking your break room. And the final journal we reviewed is the bill of materials journal, which is meant to consume one or multiple set of items in order to build a different item. This is great if you need to quickly change one item, transform items from one item into another item number while maintaining the cost that was associated with those physical units. And that's all that I have. And are there any last to wrap it up? We will go on to questions. And Katie, I'll throw it back to you for the.
All right, thanks, Jared. So again, if anyone does have any questions, please enter them into the question area in the control panel. In the meantime, I'm going to go ahead and share a link to our events page in the chat. So if you'd like to check out previous webinars or register for upcoming sessions, you can do that there. I will also be adding a link where you can set your email preferences and opt into our emails so you can stay in the know about upcoming events, as well as see our latest blog articles. So both of those are in the chat there. Let me check if there's been any questions. So I don't see any that have come through yet, but if anybody does, you can enter it into the question box there, and we can get back to you by email later today. And I will, again, also be sending this session out later this week. So thank you, Jared, for the presentation today, and thank you, everyone, for joining us. Enjoy the rest of your day.
Thank you.